Here's the deal. This week could tilt the stock market's fate more than any in recent memory. With the Federal Reserve's policy path hanging in the balance and retail giants about to unveil their financial health, investors are on high alert. But here's where it gets tricky. Will the Fed finally blink on rate cuts, or will political pressure and stubborn inflation keep rates anchored? Let's break down the high-stakes events shaping this week's market drama. The Fed's tightrope walk. Wednesday's release of the July Federal Open Market Committee (FOMC) minutes is more than just bureaucratic paperwork. These documents will reveal whether the Fed's DODs, pro-rate cut faction, or Hawks, anti-rate cut faction, dominated the July 29 to 30 meeting. Analysts like Aaron Hill of FP Markets argue the minutes can fill in the blanks about how committed officials were to easing policy. But here's the rub. While job market data has softened, July added only 98,000 jobs, and earlier months were revised down. Inflation remains a wild card. Recent producer price data showed unexpected spikes, hinting at hidden inflationary pressures. Could this force the Fed to delay cuts? Ed Yardeni of Yardeni Research warns that the minutes might expose a split in the camp that could sway September's decision. Barometers of consumer health. This week's earnings reports from retail giants like Walmart, Target, and Home Depot aren't just about quarterly profits. They're economic snapshots. Why? These companies directly reflect how households are spending or tightening belts. Top economist David Rosenberg calls them key signposts, noting that weak results could amplify fears of a slowing economy. For example, if Target reports declining same-store sales, it might signal consumers are cutting back on discretionary purchases. And let's not forget the dining in versus dining out trend Rosenberg highlighted. Fewer takeout orders and more home-cooked meals could mean households are prioritizing frugality over convenience. But here's a counterpoint. Could these earnings also reflect supply chain improvements rather than consumer pessimism? The jury's out, but the market will weigh in this week. Jackson Hole, Powell's final act. Friday's Jackson Hole Symposium is the week's crescendo. Fed Chair Jerome Powell's speech will likely set the tone for the remainder of 2025, and maybe even shape his legacy. Why? This will be Powell's last Jackson Hole as chair, and analysts expect him to telegraph a 25 basis point rate cut in September. But here's the controversy. President Trump has been publicly pressuring the Fed to lower rates, raising questions about central bank independence. Richard Saperstein of Treasury Partners argues Powell might use this platform to reinforce the need for Fed independence, while Bank of America strategists warn that a dovish speech could trigger a buy rumor, sell fact sell-off. Could this become a political flashpoint? We'll find out Friday. The bigger picture. Let's not sugarcoat it. This week is a collision of economic data, corporate performance, and political theater. The Fed's rate cut timeline will directly impact everything from mortgage rates to your 401k. But here's a provocative question to chew on. Should the Fed prioritize economic data over political pressures? Or is it time to acknowledge that monetary policy can't exist in a vacuum? Drop your thoughts in the comments. Will this week be the turning point we've all been waiting for, or just another chapter in the Fed's balancing act?